Let's talk housing. It's such an interesting space given where interest rates are and where they may be heading from here. I'm looking at the XHB on pace for its best month since November of 17, yet it's still down 15% or so from its high. Assess it for us. Where is housing right now?
Overall, I'd say that the business is solid. The builders have been enjoying very strong volumes and, in fact, still pricing power. I think that, in fact, is really due to the significant tailwinds the industry has from the demographics, acceleration of millennials finally, getting married and starting families and desperately looking for shelter. Right now, existing home sales are at existing home inventory, overall inventory in the United States is at all-time record lows, and that's more pronounced at the entry level and first-time move-up. So, I used to tell the builders, if you build it, they will come, and they're finally doing that, moving into what I'd call more the more emerging suburbs and even exurbs, and we really need that product. So the business side, from a volume perspective, has been strong. They have been dealing with a lot of cost inflation from labor, lumber, products, land, and, that certainly is an issue, but they've so far been able to pass the price increases along. What we've looked at and continue to do is very significant sample sizes of a survey for builders and representing about 15% of the market, highly correlated to the public builder results, over 95% correlation, which has been, an ability to keep us ahead of the curve. And what we've seen lately is that the double-digit order increases has decelerated to growth rates now in the higher single digits. And I think that seasonally, when you look at sequential changes, we've actually seen it slightly slower than normal seasonality for the past 4 months. And I think that what we would look at on a near-term basis is that the builders, if you're seeing slowing just in terms of growth rates, whether that's due to rates, Scott, it's certainly one of the things we ask our builders in our survey is, are you seeing resistance to price increases today? And, about 59% in the most recent May survey said they are seeing price resistance. And obviously it's been so robust. So I think that's going to be the challenge, is to see right now the price-cost spread is pretty wide, and they're able to hold or even improve margin as a sector. But we think that will get more challenging if they can't pass price along. And right now price is holding at a high single-digit pace, but it's really not going up incrementally. Mm-hmm. And if rates rise, I think that eats into affordability. What we've showed theoretically, and then I'll stop, you can ask me questions, but when you think about what would 30-year fixed rates have to be to sort of get even just back to normal affordability, thinking about the consumer who, thinks about the monthly payment as a percent of their gross income, and we're looking at about a 5.5% 30-year fix. Now, that's theoretical. We look at the individual markets, and we do see markets that are relative to history have now been more expensive. But let me stop and certainly welcome questions.
Well, 291 is where we currently sit on the 10-year as we're having this conversation. What level makes you nervous?
Well, I just said 5.5%, so you kind of look at spreads, which have been compressing over the 10-year, which is how mortgage rates are priced. You can add today, it's been running 150 to 170 basis points over the 10-year. So, today, if we call it, rounding at 3%, 10-year, if you start to look at that spread, you get another 50 basis points from here, you get 5%. Certainly 100 from here would really start to concern us about affordability. And there's a lot of other variables. We've got tax reform. What does that mean to some of the, states that are most impacted? What does that mean for consumers in terms of mobility? The builders, they're much better companies today. They certainly have had the ability to reduce cost structures. They have better cash flow. They're looking at more opportunities to increase shareholder value through whether it's M&A consolidation, share buyback, and there's a lot of investment in technology. A company like Lennar is well ahead of the curve. So I think these are some of the challenges that the investors have to digest. As the old school is early cyclicals. You don't want to own them, and they're very, very relative valuations information. But historically, people have really been more cautious on, don't fight the Fed, rates are going up, and certainly the dynamics are so different because of those tailwinds I spoke about. But rates do matter for the stocks in the near term, no question.
Yeah, I mean, let's talk about some individual names. You have a buy on, I've got, 5 stocks in front of me. You have a buy on Lennar, you have a hold on Pulte, Toll, and D.R. Horton, and then you have a buy on KB Home as well. But let's go Lennar first, the buy rating that you have. The stock's down double digits from percentage point over the past 3 months. Talk about that for a second, and I want to follow up with a question that my colleague and someone you know well, I know, Diana Olick, has sent to me to ask you. So let's talk about that stock first and foremost. What gets it going again?
Well, I think there's skepticism around the acquisition, a significant acquisition they made, Cal Atlantic. One, because the Ryland-Stanpack acquisition merger 2 years ago really didn't integrate as people had hoped and, show the growth and synergies that they necessarily thought they would in the beginning. And so they bought Cal Atlantic. We think it's a fantastic opportunity given scale and opportunity to leverage that scale. But the market's skeptical because, one, they levered up. People that are more concerned about the end of the cycle or their early cycle, as I said earlier. We think they're going to, definitely do better than the market's anticipating. They have ancillary businesses that, one of which they've announced publicly they're looking to monetize and sell. I think that the market is dubious about some of the opportunities that we think create, in our opinion, it's a great buy here relative to the other large caps that I think, is trading at a big discount. So we're bullish, and I said earlier, Lennar is really ahead of the curve. They've got significant innovation. They've invested in a company called Open Door that is really going to provide a liquidity consumers that provide them the opportunity to sell their house for cash within 3 days so they can move up to a first-time move-up, a new home. Lots of things. They've invested and partnered with a company called Blend, which is on the technology mortgage side. There's a whole bunch of things they're doing that allow for them to really create better experience for the consumer and improve their overall business. And we see that stock is really a good incremental buy here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.